American Airlines operates a fleet of over 900 airplanes. They have been in business since 1926 and have around 130,000 employees. Some people think that they aren't real, although their net income is surely real to their shareholders. Today, the company announced it is going to be ordering 260 new planes. This generally means they are thinking about the future. It could also allude to the fact that demand is rising for air travel. Their investor day was filled with graphs like this depicting how American will fly happily into the sunset for their shareholders. But is it all as positive as they make it out to be? It usually isn't, and we see that in the risks they mention for a lack of pilots. From this chart, we can see the magnitude of the shortage since 2021. This is interesting as operating expenses, specifically salaries, have increased due to a few reasons. A major reason is the bargaining agreement, which garners the pilots higher wages. It makes you wonder, in a pilot shortage, how are these 260 new planes going to fly, and at what length will American go to attract personnel using that financial bargaining? This could potentially further increase salaries and operating expenses. When looking at the chart, a long-term break and retest can be seen. We find a couple strong bounces off the $25 zone in the past. More recently, we can see strong rejections off that zone, followed with a break and retest to the downside. Ever since then, the stock has been in a downward trend. For upside, investors would want to see the stock break and hold above the $25 zone. This would likely come from a resolution of the pilot shortage. Clearly, the idea of expanding their fleet wasn't enough to cause a positive reaction on the stock.